So some of those other countries I named. And the system has worked unbelievably well. Just imagine thinking of 5 of the top 6 companies in the world ending up with a country that started with 0.5% of the population just a few hundred years ago. But what I would like you to do is look at that list for a minute or two, if you want to, and then make an estimate, make your own guess. How many of those companies are going to be on the list 30 years from now? Here they are, these powerhouses. And how many would you guess are going to be on the list? Well, it's not going to be all 20. It may not even be all 20 today or tomorrow. This was March 31st. What would you guess? And think about that yourself. Would you put on 5, 8? Well, whatever it would be. I would now invite you to look at slide 2.
Imagine waking up to find that the top 20 companies you've invested in have completely changed. This isn't a dream. It's the reality Warren Buffett is warning us about. In the next few minutes, I'll break down the 5 shocking predictions Buffett made in his final warning that could change everything for crypto and stock traders. Guys, you know Warren Buffett, right? He's that legendary investor who's made billions in the stock market. When he talks, people listen. And right now, he's saying some pretty crazy stuff about what's coming for investors. These 5 predictions from Buffett are no joke. They could totally flip the script on how we trade stocks and crypto. If you're not paying attention, you might miss out on some big opportunities or even lose a lot of money. So stick around, because what I'm about to share could be a game changer for your trading strategy. All right, here's where things get wild. Buffett's warning about a massive shakeup in the market that could leave even the smartest investors scratching their heads. Think Apple and Amazon are too big to fail? You might want to think again. Let's talk numbers for a second. Right now, Apple's sitting pretty at the top with a mind-blowing $3.4 trillion valuation. And even the 20th biggest company is worth a cool $330 billion. That's some serious cash, right? But here's the kicker. Buffett's pointing out that back in 1989, the biggest company was worth just over $100 billion. And get this, none of those top dogs from '89 are even in the top 20 today. It's like a whole new game. So what does this mean for us traders? Well, it's a wake-up call. The market's always changing, and what's hot today might be old news tomorrow. But don't panic. This isn't just about risk. It's about opportunity too. Think about it. If the whole landscape can change in 30 years, imagine what could happen in the next 5 or 10. That's where we come in as smart traders. We've got to stay on our toes, keep an eye on emerging trends, and be ready to pivot when the market shifts. This isn't just about stocks either. The crypto world moves even faster. A coin that's on fire today could be ice cold next month. But if you're paying attention, you could spot the next big thing before it blows up. Buffett's basically telling us that the future's wide open. Yeah, today's tech giants look unbeatable, but so did the top companies in 1989. The key is to stay humble, keep learning, and never think you've got it all figured out. For us traders, this means we've got to be adaptable. Don't get too attached to any one company or coin. Keep your strategy flexible and your mind open to new possibilities. The market rewards those who can see where things are heading, not just where they've been.
I would like to just go over 2 items that I would like particularly new entrants to the stock market to ponder just a bit before they try and do 30 or 40 trades a day in order to profit from what looks like a very easy game. So I would like to go to slide L1. So put that up. And these, on March 31st, I ran off a list of the 20 largest companies in the world by stock market value. Those names, good many of which you'll be familiar to, they were led by Apple. It's over $2 trillion. And it went down to the number 20th was worth $330 billion. But those are the 20 largest companies in the world by market value on March 31st. Now, if I had I was hoping I could get a little quiz machine so I could have everybody weigh in on this answer and we could flash it up a little later, but proved technically impossible But what I would like you to do is look at that list. Starts off with Apple. Saudi Aramco is a kind of a specialized company. It's, I don't know whether it's 95% owned by the government or what, but it's essentially a country that's for sale there in terms of that business. But the top 6 companies, 5 of them are American. So when you hear people say that America not working very well or something of the sort, in the whole world of the 6 top companies in value, 5 of them are in the United States. And if you think about it, we talked a little about this last year, but in 1790, we had 0.5% of the world's population. And a little less, we had 4 million people, 3.9 million people. 600,000 of them were slaves. Ireland had more people than the United States had. Russia had 5 times as many people as the U.S. did. Ukraine had twice as many people as the United States. So here we were. But what did we have? We had a map for the future, an aspirational map that somehow now only after the Constitution, 232 years later, leaves us with 5 of the top 6 companies in the world. It's not an accident. And it's not because we were way smarter, way stronger, anything of the sort. We had good soil, decent climate. So some of those other countries I named, and the system has worked unbelievably well. Just imagine thinking of 5 of the top 6 companies in the world ending up with a country that started with 0.5% of the population just a few hundred years ago. But what I would like you to do is look at that list for a minute or two, if you want to, and then make an estimate, make your own guess. How many of those companies are going to be on the list 30 years from now? Here they are, these powerhouses. And how many would you guess are going to be on the list? Well, it's not going to be all 20. It may not even be all 20 today or tomorrow. This was March 31st. What would you guess? And think about that yourself. Would you put on 5, 8? Well, whatever it would be. I would now invite you to look at slide 2, which goes back a little more than 30 years, and look at the top 20 from 1989. And if you look at the top 20 from 1989, there's 2 things that should grab your interest, at least 2. None of the 20 from 30 years ago are on the present list. None. 0. There were then 6 U.S. companies on the list, and their names are familiar to you. We have General Electric, we have Exxon, we have IBM Corp. I mean, they're still around. Merck is down there at number. None made it to the list 30 years later, 0. And I would guess that very few of you, when I asked you to play the quiz a few minutes ago, would have put down 0. And I don't think it will be 0. But it is a reminder of what extraordinary things can happen, things that seem obvious to you. That Japan had this wonderful bull market for a very long time, so you had a number of Japanese companies on the list. Today there are none, and the United States had the 6, now we have 13, but they aren't the same 6. I would invite you to think about one other thing as you look at this list. 1989 was not the dark ages. I mean, we weren't just discovering capitalism or anything else. People thought they knew a lot about the stock market, and the efficient market theory was in, and it was not a backward time. And if you look, the top company at that time had a market value of 100 billion, 104 billion. So the largest company in the world, title in just shade over 30 years, has gone from 100 billion to 2 trillion. At the bottom, the number 20 has gone from 34 billion to something a little over 10 times that. Well, that tells you something about what's happened with equality, which is a hot subject in this country. It tells you a little bit about inflation, but this was not a highly inflationary period as a whole. But it tells you that capitalism has worked incredibly well, especially for the capitalists. And it's a pretty astounding number. Do you think it could be repeated now, that 30 years from now, that you could take 2 trillion for Apple, multiply any company and come up with 30 times that for the leader? It seems impossible, and maybe it is impossible, but we were just as sure of ourselves as investors and Wall Street was in 1989 as we are today. But the world can change in very, very dramatic ways. And I'll just give you one other example you might ponder. When you start feeling too sure of yourself. One thing it shows, incidentally, is that it's a great argument for index funds, is that the main thing to do was to be aboard the ship, a ship. They were all going to a better promised land. You used to know which one was the one they'd necessarily get on, but you couldn't help but do well if you just had a diversified group of equities. U.S. equities would be my preference, but to hold over a 30-year period. But if you thought you knew a lot about which ones to pick, or the person that you had hiring, you were paying a lot of money to, had all these ideas, and they could tell you their best ideas in 1989 did not necessarily do that well, although overall equities were absolutely the place to be. Secondly, people get enormously attracted to various industries. I mean, I think if you know, if a company says it's in the XYZ industry and that's a popular one, you can sell IPOs, you can sell SPACs, people disregard sales numbers, earnings numbers. It's just, it's the place to be. So Berkshire Hathaway, where was the place to be in 1903 when my dad was born in 1903, but that wasn't really that big of news. But it wasn't big news that actually Henry Ford was starting the Ford Motor Company. He failed a couple of times before, but he was about to change the world. I mean, the auto, when you think about everything, we've got a great auto insurance company. If there weren't any autos, we wouldn't have Geico. But it transformed the country. And Henry Ford brought in the $5 daily wage, and that was a huge thing. Assembly lines, everything, autos came along. So let's just assume that you had seen a quick glance back in 1903 of all the interstate highways, 290 million vehicles on the road in the United States. Everything about it said, well, this is pretty easy. It's going to be cars. It's going to be autos. Well, we own a company called Marmon. We bought it from the Pritzker family some years ago. Pritzkers had built this business from many, many, many companies that they'd acquired. And the name of their company was Marmon. And I don't know exactly why Jay and Bob decided to name it Marmon, but they did own a company called Marmon. And the Marmon, which in 1911 had been the company whose car won the first Indianapolis 500. Maybe that's why they called it Marmon. They were proud of the fact that the company in 1911 won the first Indianapolis 500. It also was the company that invented the rearview mirror. I'm not sure whether that was a big contribution to society, certainly around your household. Rearview mirror, you don't want to emphasize too much. But the car that was entered in the Indianapolis 500, the guy who normally sat next to the driver and looked backwards to tell what the competitors were doing, he was sick, so they invented the rearview mirror. So let's just assume that you decided that autos were this incredible thing, and someday there'd be an Indianapolis 500, and someday they'd have rearview mirrors on cars, and someday 290 million cars would be buzzing around the United States, or autos, or company trucks there. And so I decided to look at the history, and I thought I'd put up a list of auto companies from over the years. And I was originally going to put up just the ones that were the M's so I could get them on one slide. But when I went to the M's, it went on and on and on. So I just decided to put up the ones that started with MA. And as you can see, there were almost 40 companies that went into the auto business. Just started with MA, including our Marmon there in the middle column, and which lasted for a while. Quite a while. It was selling cars in the 1930s were really quite special. But in any event, there were at least 2,000 companies that entered the auto business because it clearly had this incredible future. And of course, you remember that in 2009, there were 3 left, 2 of which went bankrupt. So there is a lot more to picking stocks than figuring out what's going to be a wonderful industry in the future. The Maytag company put out a car, Allstate put out a car, DuPont put out a car. I mean, there was a Nebraska Motor Company. Everybody started car companies, just like everybody's starting something now that can be where you can get money from people. But there were very, very, very few people that picked the winner or got the opportunity. At Ford Motor, Henry Ford had a few partners, and he really didn't like them, so he figured a way to buy them out. That was sort of the beginning of the auto finance. So that's a long story, but we won't get into that. But you couldn't buy into Ford Motor, and of course General Motors became the dominant company. Finally, when Henry Ford did not really make the shift from the Model T to the Model A, did not work very well. So I just want to tell you, it's not as easy as it sounds. We had an enormous economic recovery, but the minds of people had been so scarred, the memories parents told their children. 1929 became a symbol in people's minds. I mean, if you said 1929, it was like saying 1776 or 1492. I mean, everybody knew exactly what you were talking about. In 1929, my dad, who was 26 years of age then, was employed as a securities salesman by a local small bank. He sold stocks and bonds, but he mostly sold stocks. And when stocks fall 48%, and you were selling them to people a few months ago, you really don't feel like going out and facing those same people. So I think my dad probably elected to do, as they say now, shelter in place, which means stay at home. And there really wasn't that much in our house. We just had a small yard. It was wintertime anyway. My dad wouldn't have been puttering around the yard anyway. And there really wasn't, the television wasn't there. And he and my mother got along very well. So under those conditions, I was born about 9 months later. So I didn't notice at the time that the market was closed. But the stock market had actually recovered over 20% during that 9.5-month period or thereabouts. People did not think in the fall of 1930, they did not think they were in the Great Depression. They thought it was a recession, very much like it occurred at least a dozen times, although not always when stock markets were important. But we'd had many recessions in the United States over the time, and this did not look like it was something dramatically out of the ordinary. Actually, for about 10 days after my birth, the stock market actually managed to go up all of 1 or 2% there. In those 10 days, well, from that point, the stock market went from level of 240 to 241, which was a noticeable decline because if somebody had given me $1,000 on the day I was born and I'd bought stocks with it, and bought the Dow average, my $1,000 would have become $170 in less than 2 years. That is something that none of us here have ever experienced. That we may have had it with one stock occasionally, but in terms of having a broad range of America marked down 83% in 2 years and marked down 89% of the peak was in September 3rd, 1929, was extraordinary. And in that intervening period, less than 1 year after I was born, just slightly less than 1 year, my dad went to the bank where he worked and had his account. And of course, the bank had a sign on it closed. And so he had no job. He had 2 kids at that point. His father had a grocery store, but Charlie and I both worked for my grandfather. Charlie worked there in 1940. I worked there in 1941, so we didn't know each other. But my grandfather said to my father that, "Don't worry about your groceries, Howard." He says, "I'll just let your bill run." That was my grandfather. Not exactly. He cared about his family, but he wasn't going to go crazy. And one of the things as I look back on that period, and I don't think the economists generally like to give it that much of a point of importance, but if we'd had the FDIC, the FDIC started on January 1st, 1934. It was part of the sweeping legislation that took place when Roosevelt came in. But if we'd had the FDIC, we would have had a much, much different experience, I believe, in the Great Depression. People blame it on Smoot-Hawley. There's all kinds of things in the margin requirements in 29, and all of those things entered into creating a recession. But if you have over 4,000 banks fail, that's 4,000 local experiences where people save and save and save, put their money away, and then someday they reach for it and it's gone. And that happens, in all 48 states, and it happens to your neighbors, and it happens to your relatives. It has to have an effect on the psyche that's incredible. So one very, very, very good thing that came out of the Depression, in my view, is the FDIC, and it would have been a somewhat different world, I'm sure, if the bank failures hadn't just rolled across this country, and the people that thought that they were savers found out that they had nothing when they went there, and there was a sign that said closed. So the Great Depression went on and lasted a very long time, but it lasted a lot longer in the minds of people than it did actually in its effects. World War II came along, and on sort of an involuntary manner, we adopted Keynesianism. We started running fiscal deficits, of course, that were absolutely huge, and took our debt up to a percentage of GDP, which had never reached before and never reached since. So we had an enormous economic recovery, but the minds of people had been so scarred, the memories parents told their children. 1929 became a symbol in people's minds. I mean, if you said 1929, it was like saying 1776 or 1492. I mean, everybody knew exactly what you were talking about, and it affected stock prices in a rather remarkable way. It was January 4th of 1951 that the kid who was born on August 30th in 1930 had finished college before the stock market got back to where it was at that earlier time. So take the years from 1920 or 1929 to 1951 and bear in mind that, the country was only 140 years old when this started. That's 20 years out of this amazing 231-year lifetime of our country. That was flat out a time for a long time of no economic growth and no feeling by people in terms about the wealth of the country, about what the American economy was worth, what all these corporations that were doing far, far, far better than they were on it all. But it took all of that time to restore in the market a price level that was equal to what it was when I was born 20 years earlier. So if you think about the fact that we're enduring a few months, and we'll endure many more months, and we don't know how it comes out. And people in the 30s didn't know how it was going to come out, but they endured, persevered, prospered, and the American miracle continued. But it's interesting in that at the start of 1954, the stock market the Dow was only at about 280. And I remember 1954 because it was the best year I ever had in the stock market. The Dow went from 280 or thereabouts at the start of the year to a little over 400 at the end of the year. And as soon as it went across 381, that famous figure from 1929, when it went to 400, everybody wondered, is this 1929 all over again? And that seems a little far-fetched because it was a different country in 1954. But that was the common question, and it actually achieved such a level of worry about whether we were about to jump off another cliff, just because the 381 of 1929 had been exceeded, that Senator Bill Fulbright of Arkansas, who became very famous later in terms of the Foreign Relations Committee, but he headed the Senate Banking Committee, and he called for a special investigation. He really was questioning whether we had built another house of cards again. And his committee, in March of 1955, with the Dow at 405, assembled 20 of the best minds in the United States to testify as to whether we were going crazy again. The Dow was at 400, and we'd gotten in this incredible trouble before, but that was the mindset of the country. It's incredible. We didn't really believe America was what it was. And my boss, the reason I'm familiar with this, was that I was working in New York for one of the 20 people that was called down to testify. And I remember, because Ben Graham was one of the 3 smartest people I've met in my life, and when he testified, the Dow at 404, he had one line in there right toward the start in his written testimony, and he said, the stock market is high. It looks high. It is high, but it's not as high as it looks. And since that time, we felt the American tailwind at full force, and the Dow, when we made the slide, it was about 24,000. So you're looking at a market today that has produced $100 for every dollar. All you did was had to believe in America, just buy a cross-section of America. You didn't have to read the Wall Street Journal. You didn't have to look up the price of your stock. You didn't have to pay a lot of money in fees to anybody. You just had to believe that the American miracle was intact. But you'd had this testing period between 1929 and certainly 1954 is indicated by what happened when it got back up to 380. You had this testing period, and people really, they'd lost faith to some degree. They just didn't see the potential of what America could do. And we found that nothing can stop America when you get right down to it. It's been true all along. It may have been interrupted with the scariest of scenarios when you had a war with one group of states fighting another group of states. And it may have been tested again in the Great Depression, and it may be tested now to some degree. But in the end, the answer is never bet against America. And that, in my view, is as true today as it was in 1789, and even was true during the Civil War and the depths of the Depression.